Have you been daydreaming about financial independence? Being able to not have to worry about that next paycheck, or being able to travel when you want, or firing your boss by retiring early? Well, instead of daydreaming, I'm going to help you do something about it, because financial independence is more attainable than you think. An important step when it comes to reaching financial independence is planning and not leaving your finances up to chance. In this video, I'm going to discuss a couple of financial independence calculators that will help you with that planning. These calculators give you a snapshot of where you are in your journey to financial independence and how your savings, spending, and your investment returns can affect how and when you achieve it. We're going to explore some of the best financial independence calculators out there and how you can get started. Hi, I'm Nadia, one half of the Wealth Twins, and I retired over 10 years ago and hope to help you do the same. So whether you're just embarking on your financial independence journey or you're well on your way, you'll get something from this video. So let's jump into it. Now you may be thinking, can I just use one of the many retirement calculators out there in order to do the same thing? Well, the answer is not really, and I'll explain why. So the reason why you shouldn't use a retirement calculator to help you determine when you will reach financial independence is because there are two different goals. A traditional retirement assumes that you stop working entirely when you reach a certain age, and in the US that age is usually 65. You no longer earn a paycheck, and instead you rely on other sources of income like Social Security, a pension, or your retirement savings to help you cover your living expenses. Traditional retirement assumes that you have been working for decades. The primary difference between financial independence and a traditional retirement is the relationship with work and income. Financial independence is when you have enough wealth that you don't actively have to work for a regular income. You can live off your investments, passive income, or other assets. It doesn't mean that you have to stop working, but that you have the freedom to choose whether or not you will work, and if you do work, how much time you will dedicate to working. Financial independence can happen at any age. It all depends on how much money you have coming in or how much wealth you generated versus how much money you're spending. Even if you look at the FIRE movement, you can reach financial independence and be there for years before you actually decide to retire early. So since retirement and financial independence are two different goals, you have to plan differently and use different tools. That's why it's not appropriate to use a retirement calculator if you're trying to find out when you can reach financial independence. Now, the first one we're going to look at is Firecalc. Firecalc gives you an idea of how safe or risky your retirement plan is because it gives you different models based on historical evidence since 1871. So it lets you know how your portfolio would have performed based on every scenario or market condition that we have experienced since 1871. Firecalc is pretty simple to use because you only need to plug in three numbers: how much money you need, how much money you have, and how long you want that money or how many years you want that money to last you. It assumes that you want to keep your current spending level and your current lifestyle. One of the things I like about Firecalc is that it gives you a number of scenarios, and it gives you a paragraph that summarizes its findings, the best and worst case scenarios. The summarized findings in the paragraph is very easy to read, which I appreciate it because the graphs and scenarios it spits out can be very intimidating, okay? So this gives you an extra layer of understanding because you have something that shows you this huge graph, but it gives you a paragraph that's very easy to understand, and it gives you the best and worst case scenarios. I also appreciated the fact that your spending is adjusted based on inflation. The calculator is very easy to use because it only requires three numbers, but it also allows you to enter in additional income sources like Social Security or pension if you are going to receive that, and adjust your spending. Now, the problem I have with this calculator, if you want to change the models and change like your spending, annual spending, or you want to change how much income you have coming in, you will have to do that on different windows in this website. Now, it's like similar to tabs in a spreadsheet, but this is on a website, so you just have to look up and look at the different headings in order to choose the different things that you want to change. Now, once you figure that out, after being a little confusing, it is still easy to use, and it will spit out your best case and your worst case scenario based on the changes you make. Firecalc makes basic assumptions about your portfolio, like the amount of fees and the performance of your portfolio, to help build the scenarios. Now, the next one would be CFIRism or CFIRism, I don't know. But what's interesting about this calculator is that it is crowdsourced. The interface is very easy to use, and you just have to plug in numbers. It's not the prettiest interface, but it is really good. Just like the Firecalc, it makes some basic assumptions about your portfolio breakdown, like how much you would have in stocks versus bonds and what fees you would be paying, and it also takes into account inflation. Now, the potential limitation that I see with CFIRism is that because it's crowdsourced, it's not updated as much as you would think. The last update that I saw on it was September 2022, which is not that long ago, but you want something fresh, so it just depends on who's updating it and putting new features in. Now, in order to see what feature upgrades are in progress, you will have to log in, give them your name and email in order to get into a Trello board to see those upcoming changes. Now, unlike Firecalc, it doesn't digest the information for you into a summarized paragraph. So you have to do a little more work on your own to understand its findings and digest that data on your own for your own personal needs. Now, the next one is On Trajectory. On Trajectory has a pro or a personal account. So I guess a lot of financial advisors may use this, but you can also use this for personal use. Now, in order to use On Trajectory, you have to sign up. So you provide your name and your email address if you want to use the free version. If you want to use an upgraded version that gives you unlimited flexibility, you will have to start paying $8 a month. This is the only calculator I saw that would charge you for its capabilities. Now, I will say this is a very nice calculator and the interface is very professional. You can tell this is why they charge for this, because there's probably a lot of money that goes into maintaining this and building that website. When you first log in, one of the questions they ask is what year you were born and whether or not you have a spouse. When you're using this calculator, you'll see that there's a little button that you can see a video that will allow you to understand the number you're about to input, what it is, and why you're using that in order to calculate your financial independence. On Trajectory is the only one I saw that will allow you to add different assets in, like real estate, valuable collectibles. I didn't see that in the other calculators. Being able to add those assets in really gives you a complete picture of your wealth. Now, the problem I have with On Trajectory is when you go to add in additional assets or you go to add in additional streams of income, it stops you and tells you that you need to upgrade in order to add those extra line items. I guess it's worth the extra $8 for 1 month if you want to do that, but I just want you to be aware of that. The free model just comes with a basic line item, only one line of income, only one line for assets. That asset will be your most valuable asset, which is most likely your investment portfolio. The next one we're going to look at is Engaging Data's FI Calculator. This calculator allows you to use your savings rate and your retirement spending to determine how long it will be for you to reach financial independence and potentially retire. You have a lot of flexibility to be able to plug in numbers and tweak them as you see fit. Not only will it tell you how many years it will take you to retire, it will also tell you what age you will be when you hit that number, which you can do yourself, but it's easy to see there right there. You have how many years to retirement and what age you will be. It also gives you a fire target for your portfolio so you know what to shoot for. You're not in the dark anymore when it comes to how much you should have in your portfolio before you're able to hit financial independence based on your spending and based on your lifestyle. What I also like about this calculator is that you're able to change the results based on sensitivity. Now, it comes with some general assumptions, but you're able to change stock sensitivity, which is the returns that you may have in the market if they differ from the assumptions it has, or you change by spending sensitivity, which you want to see if your spending might go up or down over the years, how would that affect your outcome? This calculator also takes into account inflation, which I really appreciate. This is a free calculator, so it's not going to come with videos in order to explain what field you're putting in and why, but it does come with little information boxes that you can click on to find out what that input would be and how it makes a difference in your financial independence journey. It also allows you to add in extra income and expenses. Now, if you're a person who really likes nitty-gritty details, this calculator is for you. But it requires a lot of work up front so you put the proper information into the fields. What this calculator does not do is take into account what will happen once you start withdrawing from your retirement savings. This is not a calculator I would suggest for someone who's new to personal finance because it can be a little intimidating. You have to know your tax rate, you have to know how much you make after taxes. It's a lot, and you will have to find these numbers somewhere. You can do it, but it's a lot more work on your end. And even though it allows you to capture extra income or expenses, it doesn't allow you to put them on different line items. And the reason why this is a problem for me is because one, when you input income on this calculator, it allows you to put the start year and the end year that income will happen. But the problem is when you have multiple income sources and they may start or stop in different years, you can't capture that if it's not on a different line item. It will have the same start and end date. And the same thing goes for expenses. Let's say you have a mortgage and you have 15 more years on your mortgage. Now, let's say you also have credit card debt, which you count as an expense. If you have them on the same line item, hopefully it doesn't take you 15 years to pay off your credit card debt. So you need another way to be able to capture the start and end date of that so that that can be taken into account when it spits out its calculations. You can play around with it and put different income based on the start and end year separately, but I don't really know if it's useful if you do that. So maybe you can probably just put in an income that you know is going to last you throughout your retirement. So maybe you have a passive income source that you know is pretty stable and is going to carry you over for the next 25, 30 years. And then maybe you can estimate how much you're going to get from Social Security and add that in. I really think it's difficult when you put everything on a line item, especially when it comes to expenses. Now, the next one is not so much a calculator, but it's more of an honorable mention because since engaging data FI calculator does not simulate what will happen once you start withdrawing from your retirement savings, this one can help you with that. The calculator that could help supplement that is called Early Retirement Now's Safe Withdrawal Calculator. Now, the good thing about this calculator is that it does not work off simulations. It makes its calculations the same way an accountant or an actuary would, and that's not based on simulations. It's based off net present value in order to give you an idea of what a safe withdrawal rate would be for you when you go into retirement. Now, this calculator is really a Google sheet, okay? So in order to use this, you would first have to open up the sheet, make a copy, save it to your own computer, and then you can start manipulating the data that you put into that spreadsheet. Now, I will say, if you're intimidated by pretty impressive spreadsheets and a lot of numbers, this probably wouldn't be your first choice. But on the other hand, I think it's very cool because this spreadsheet included a lot of things that I did not see in other calculators. It had a line item for nursing home costs. It had a line item for the sale of your home and whether or not you or your spouse is receiving a pension. These are real numbers that people have to take into account in the future. So I really appreciate that being in this calculator. I didn't see it anywhere else. We like to look to the future and think everything is going to stay the same, but most likely you may have to look into the cost of a nursing home and the proceeds of selling your house if you're downsizing at a later age. This makes this calculator very realistic. If you want to be a little more certain about how long your money will last once you start withdrawing, this is a good calculator / spreadsheet for you to use. But like I said, it can be a little intimidating. The next calculator is from Physician on Fire, and it's the Time to FI calculator. Now again, calling this a calculator is a little pushing it. It really is part of a spreadsheet that has a formula in it, but it's very small and very easy to use. It's not at all like the spreadsheet you will be using on Early Retirement Now. The Time to FI calculator helps you determine how many more years you have before you reach financial independence and makes basic assumptions and gives you returns based on those assumptions. The Time to FI calculator helps you determine how many more years you have until reaching FI based on various returns on your investments. The returns they have that are already built in and will calculate automatically are 2%, 4%, and 6%. But you're also able to put your own projected return into the spreadsheet and calculate how many years you would have based on that return. In order to use this calculator, you have to be able to put in 3 numbers. How much your portfolio is now, what's your starting portfolio amount, how much do you want to spend on a yearly basis, and how long you want that money to be able to last you. It will then calculate how many years it will take you to reach how much you need based on those 3 returns, the 2%, the 4%, and the 6%. And it will also generate how long it will take you based on the return that you plug in. This is a good calculator for anyone who wants simplicity and a little bit of flexibility. It's a good starting point, but if you want to add in extra things like additional sources of income like passive income or expenses like your mortgage or anything like that, then this probably isn't the one that you should use in the future. It's a good starting point, but you need one that can do a little more heavy lifting than this one because this calculator will not be able to handle that. Now let's jump into the spreadsheet on Mad Fientist. Now, like I said, can be considered a calculator, but it really is a spreadsheet. Now, I like the spreadsheet because it allows you to use real world numbers in order to calculate how long it will take you to reach financial independence. It takes in your net worth, it takes in your expenses, it takes in things that you would have to do on a daily or monthly basis and know those numbers and plug it into the spreadsheet. This spreadsheet is broken up into different tabs, and the final tab will spit out how long you have until financial independence. This spreadsheet is very practical, and I like the fact that it gets very granular. And a lot of people need to know these numbers regardless if you're shooting for financial independence. This is a good tool to use. If you're better at working at numbers that you can calculate on a monthly basis or a weekly basis, then you might want to look into this spreadsheet. There is a lot of tracking you will have to do, or you can use other sources to do that tracking for you. But the good thing about this, it also comes with a video tutorial to show you how to use the spreadsheet. Whether or not you're shooting for financial independence at an early age or more of a traditional retirement, the key thing to understand is that there are important things that you must know in order to reach those goals. You need to understand your financial needs, your earning potential, and your lifestyle choices. These are important factors when it comes to trying to reach financial independence. These calculators are a great starting point and can give you a clear sense of what direction you're heading in, so you know if you're on the right path to reaching financial independence. But these are just a piece of what you will need in order to plan your financial future. No calculator can capture all the nuances that happen in your life. So it's always good to use these tools as guides, but not as gospel, because a lot of the times they're built off simulations. They cannot tell you exactly what's going to happen. You should supplement them with additional knowledge that you can gain about personal finances, like the knowledge you can gain from joining our newsletter called the Wealth Pack. Our Wealth Pack newsletter is a way that we help you increase your knowledge about financial literacy and financial planning, help you increase your investing knowledge, and we give you information there that we don't share on YouTube. So if you want to join the Wealth Pack is free, and you can see the link to join down in the description. We call it the Wealth Pack because just like any other pack, we don't want to leave anyone behind. So like I said, it's free to join. Just click the link in the description below. And don't forget to like this video and subscribe to the channel, because we would love to have you as part of our community.